OMFIF was very pleased to work with CABE in doing some research where we examined the integration, investment, and trade opportunities in Central America. That report, of course, is available to everyone on this call, and I do encourage you to read it. Amongst the things we found were the very strong levels of interregional collaboration. And in a time which has been very divided, it was a real pleasure to find evidence of people coming together. Central America has proven to be an attractive destination for foreign investment and commerce. And as Asia Pacific looks outside its own boundaries and to invest in other countries, we're interested in finding out more about what Central America presents as an opportunity for the region and for others around us. Very pleased today to have the privilege of speaking to our panel. It's a very rich panel indeed with deep investment experience. Masamoto Kenichi, as we've heard, is the Director for Mexico, Central America, and the Caribbean Division at the Ministry of Foreign Affairs in Japan, bringing, of course, that very public and policy-oriented view for us. We also have Dante Mossi, the Executive President of CABE. Dante has been very involved with working with OMFIF, and it's a real pleasure to continue working with you, Dante. Marissa Pardo, the head of the public sector for the Americas in BBVA, brings that private enterprise lens to it and how finance can really help grow regions. Yanni Savanto, the head of Treasury Client Solutions, Latin America and the Caribbean at the IFC, is also joining us to share expert opinions from, of course, one of the most important multilaterals that exist. Now, I'm hoping those words are not too strong, but to open us up for the day, I'd love to hear from Masamoto-san, just to give us the Asian perspective on the investability of Central America. Masamoto-san, if I could invite you to unmute yourself and to share your views with us.
Thank you, Tamara-san. I'm very happy to join this panel discussion, which I think is very timely. I work for the Japanese government diplomatic service, and Japan has cordial relations with the Central American countries. In addition to bilateral dialogues, we have also a regular dialogue with the Sistema de la Integración Centroamericana, the SICA. Economic issues are always among major topics in these dialogues. I strongly believe that Central America has enormous potential. This region produces a series of attractive products, such as highly renowned coffee. Northern Central American countries are close to North America supply chain. Costa Rica is famous for its enthusiasm for education. Panama is located at the gateway to the South American continent, and so on and so forth. But this sub-region has not taken full advantage of its potential. The migration issue spotlights the difficulty of some countries. There are about 150 Japanese companies active in Central America. This number is rather humble, given that there are about 2,900 Japanese companies in Latin America and the Caribbean, and about 75,000 in the whole world. Of course, FDI is only one aspect of economic activities. There is also a large geographical distance between Japan and Central America. But we are aware of challenges in doing business in some countries. They include complicated, time-consuming procedures, unstable security, and insufficient infrastructure, especially for transportation and electricity. Of course, the situation differs from country to country. And also, a limited size of economies and the different business customs also limit the sub-region's attractiveness and its economic growth. Against this background, we often talk about the viable business environment in dialogues with Central American countries. We have also provided assistance in such areas as poverty reduction and disaster management, so that enabling conditions for economic growth are developed. Then we have supported the efforts of Central American countries for the integration. We have done so in our dialogue with the SICA. Green investment is one of today's topics, I believe. Japan is to focus on a virtuous cycle of economy and the environment, and to develop itself to bring about the green society through revolutionary innovations. Japan continues to engage in international cooperation to support the global transition towards the decarbonization. Japan is doing so in the sub-region. For example, Japan Bank for International Cooperation, JBIC, is now working with the CABE, BCA, to provide funds to environment-friendly smart energy projects. Now, the world is in a big transition, and most notably towards the green economy and towards the digital economy. In the middle of such transition, the COVID-19 crisis happened. Last year was very, very tough for Central America, as it was also hit by 2 hurricanes. The prospects of this year must be better. As a friend, we hope that Central America build back better and take full advantage of its potential, overcoming the challenges also while adapting to the transition the world is going through. I stop here.
Thank you, Masamoto-san. It's interesting that you mention the role of, the importance of the ease of doing business. And I think amongst our panel today, we have, Dante with us. And so Dante, as the executive president of CABE, you work with many of the governments and economies who interact with Central America. What changes have you observed in the region around, the ease of doing business and setting up, shop there? What do you think it applies for overseas investors who are interested in the region?
No, thank you, Tamara, and thank you for OMFIF for having this forum. First of all, I think there's a realization at the highest political level, presidents, that the market in Central America behaves as a whole market that encompasses about 70 million people. And if Central America were to be a country, it will be the 4th richest economy in Latin America. So that, when you see that from that angle, and you are a country in Asia, then you think, oh, I might be interested in working with that country because it's very attractive. So basically, what I've been trying to conform in Central America is to start behaving as a bloc, as a whole economy, and we are financing what we call the industrial revolution of Central America, which is basically a definite move towards sustainable energy, sustainable rails, transportation to ensure that ports get the cargo more efficiently. So there are several changes that are taking place, not in one country, it's in every country. I have the privilege of being able to chat with all the heads of state of all these countries, members to CABE. And the ambition is the same. It's basically, they are really looking for more investment, more jobs, something that will help, reduce the illegal immigration of Central Americans to mainly the US. And I think there's an opportunity now with the, nearshoring of that COVID has created to ensure that markets feel closer to the centers of production. So there's a definite change. If anything, I could tell you that on March 11th last year, I met with all the presidents of the CICA countries, and they were so concerned about COVID. And for the first time, I gotta tell you, I saw all the countries of CICA thinking as one bloc. And now, so even for the vaccine, we are actually, dealing with a regional program for all the countries to acquire the vaccine and end off, this crisis. So I think to come back at your question, what has changed? I think there's a realization that no one individual country is significant enough. But when Central America is treated as a bloc, it has its own weight, and it becomes attractive to giants in Asia, like Taiwan and Korea. So now when we go to those markets, it's relatively easy for us to identify CABE as the bank for Central America. So that would be my answer. Thank you.
Thank you, Dante. And that really does draw on that theme about, how in some ways COVID has really shown that collaboration can lend strength. And when we think about building back better, it has such an important role to play. One of the things that I'm aware of is when we think about building back better, one of the things that implies is that we change the way we operate. And so, Marissa, if I could perhaps call on you, I guess, what are the opportunities that you see emerging to do business in Central America? What is the business that we might actually want to do? And what are the drivers you see shaping the future of investing?
Thank you, Tamara. I truly believe there is an exciting and challenging way forward for investors in Central America. I mean, macro fundamentals have been fairly sensible with a steady growth over the past 5 years. Of course, some countries have been performing better than others, but in general, very good indicators. So in terms of opportunities, let me talk about investments from a project perspective and also from a capital market perspective, as maybe some of the investors that are here with us today may not be able to invest directly in projects. So let's start from a project perspective. We have been supporting our clients that have been bidding for projects in Central America. So through our client eyes, we have seen that the most demanded sectors have been transport, electricity, water treatment plants, education, and social housing. It is true that throughout 2020, governments have been prioritizing their resources towards tackling the health emergency, supporting SMEs and vulnerable populations. But at the same time, we are seeing how CAPEX projects are being reactivated. I believe that clean energy, sustainable transport, social and inclusion projects are key sectors to rebuild the region better. And I also believe that more projects in a PPA format are to come. So if we turn now at the capital markets, most countries in Central America have issued international bonds. The most recent issuers have been Panama and Dominican Republic. They issued in January at historically attractive levels and accomplished a significant portion of their funding needs. If we turn to the ESG space, Central America definitely presents room for growth. As for now, 5 Central American issuers have tapped the ESG market, including CABEI. And from BBVA, we are working on a 6th green issue in Central America that will come to the market by the end of this first quarter. So we are clearly seeing that there is an increasing appetite, both from issuers and investors, to integrate ESG principles. And the question is, what is needed in order to develop these opportunities? Support coming from governments is key. Governments in Central America can lead this market and be an example for other issuers. In fact, issuing an ESG bond is probably the best way they have to explain to their expenditures. And it's also a way of increasing their creditworthiness, as there is a strong correlation between sustainability and creditworthiness. Even more, last week, the World Bank announced it was working with the IMF on ways to factor climate change into the debt negotiations of some emerging economies. The second issue that is needed is social and environmental due diligence for projects. And the third thing we need is market standardization and transparency. Maybe adopting ICMA principles or the European taxonomy may be a way forward for Central America. And in terms of transparency, the region can take advantage of the recent developments. There are platforms that are bringing some multilaterals that will provide more transparency and access to information. These platforms will allow investors to track bonds and see how their proceeds are being used. And now, if we turn now to innovation, what are the drivers that will shape the future? We've seen how governments are pioneering in new debt instruments, which clearly contributes to sovereign debt sustainability. And this is crucial to attract private investment. Before the pandemic, we were already seeing how new instruments were successfully used to finance projects in Central America. For example, structures through promissory notes that are bought to the government and are delivered as construction milestones are achieved. And now the pandemic has brought even more innovation in the debt instruments that sovereign use. We have seen public sector institutions more focused in diversifying their sources of funding. And in fact, we have been very interesting structures. Some Central American governments have been establishing SPVs guaranteed by the World Bank, enabling to crowd in institutional investors. These institutional investors have been attracted by the ESG characteristics of the projects that were funded through the SPV, that were gender, social, and inclusion. So I am really looking forward that this trend continues, and we have more pioneer structures that will help to crowd in institutional investors into the region.
Thank you, Marissa. We actually had a question in the Q&A box that touches on the points you raised. So the question was around how the private sector can partner to help catalyze prosperity in Central America. And specifically, it was asking, what do you think the 3 or 4 sectors are where investment could be focused? So I know you mentioned that the trends to invest in transport, electricity, water, education, and social housing. Do you think that there has been increased focus in that area, or is there more work to be done in drawing investment into those areas from the for the private sector?
I mean, this is our experience that we are seeing in our global clients, that are the sectors that have been more demanded in our clients. I think there's also a lot of space for clean energy in the region, and here having multilaterals being able to partner with commercial banks and other agencies is critical, so we can mobilize all the debt to Central America.
Fantastic. I think public-private partnership is a view that we want to explore. And actually, before I move on from this question, perhaps I can just give the panel a second to see if anyone might like to contribute an opinion on this question before we move on.
Tamara, may I add something on transport? And I think one of the solutions we have suggested to all the countries to innovate. This building back better, it means, for example, we are trying to introduce electric mobility in the region. Some countries are actually moving faster than others, but it is amazing how hard it is, even with full financing from CABE, to the private sector and even governments, to have suppliers of electric buses, electric cars, to move into the region, because somehow there's this perception that the region is unable to actually to move into that new arena. Even though if you look at, as Maria Luisa mentioned, the fundamentals are there. I mean, take the record for CABE. All the member countries have a record of paying on time, 0 arrears. And this has been true for the last 10 years. So basically what that tells you is that the countries are actually healthy in terms of economic growth. They are liquid. They are not looking for grants. They are not looking for giveaways from other countries. The countries are really looking for investors to come and develop these new markets that they did not exist before. So this is a fantastic market in terms of it doesn't produce any oil product yet. Whenever the price of oil goes up, these economies tremble a bit. So, I mean, it's just logical that we should move towards electric mobility. And we at CABE, we actually have the resources to help the countries move forward with that. But we need our investors that come to the region and actually make these new innovative ways of transport available to the general public. So my call here to investors: come. Don't be afraid. There's the capital and the debt, as Maria Luisa mentioned, to actually build up on that. And one key characteristic of Central America, and I come from the World Bank, that's why I tell you this. I work in Africa and other parts of the world, and I think the private sector is very risk-taking. I mean, they will take risks that normally you will not see. So the private sector is willing to go into PPPs more willingly than in other regions of the world that I worked with before. So thank you.
No, I think that is very key. And one of the things that I've found is, the growth of these products to help drive the change on the ground is actually incredibly significant, as the question suggested, for catalyzing prosperity, but also for helping everybody around the world transition towards a carbon neutral future. I actually realized, Dante, that that CABE itself has taken quite an active role in trying to drive that change. I think in the last month, CABE launched a dollar-denominated social bond. And I was quite interesting for this, for the investor population listening today to understand how that experience was for CABE to launch a bond like that in this environment and what the investor feedback was.
Look, I mean, I think the capital markets have been very beneficial for the region. And basically, we told the story that most of the investments that we do are seeking to generate employment. I mean, one of the big victims of COVID was actually employment, even small and medium enterprise, which generate most of the jobs. And so when we went to the markets and we told the story, we actually we got certified that what we were selling in terms of bonds were actually to generate economic prosperity and inclusion. That actually the market just went through it. And just before that bond, and it's not, I'm not telling that ESG bonds are fantastic. They are, and as you mentioned, they are quite what we needed at the moment. But also we issued the first COVID vaccine bond in Asia. And we got returns that were actually almost as AAA returns. So, so the region actually has a story to tell to the world. And actually we are convinced, as you mentioned in the introduction, that reaching out to countries in Asia has actually been very successful. Actually, we issued that COVID vaccine bond in Japan, and the first one, and it was fantastic. I mean, I think it was LIBOR plus 175 basis points. So for us, that was quite a return. And the global issuance we did with the ESG, actually we actually got probably like 3 times as much offers as we had planned to issue, and the returns were also fantastic. So I think there's a convincing argument that CABE is actually somehow representing all the regional interests of the region, and broadcasting that to investors that is a good investment to actually to come to us to finance the individual projects in the individual countries.
Thank you, Dante. And I think with that, you might have addressed the question that we just had from Romel Tellez, who was asking, what are the most sought after debt instruments investors are looking for and how they work? I think the rise of green finance has definitely been something that people are very aware of, and the fact that they have remained attractive worldwide. OMFIF recently did an event with DZ Bank where we had a very broad panel of investors, and they spoke about how social bonds and ESG bonds have allowed them to access markets that they otherwise potentially could not have invested in. And so the real potential for these instruments to provide access where people previously were outside a mandate, or the projects themselves were too small, they now get packaged into a bigger whole. I think there's real potential there. I'd like to invite the panel to contribute any other debt instruments they think have been rising in popularity before we move on from the question.
I'm happy to jump on that one briefly. So clearly, Tamara, like you said, and what Marisa said as well, it's sort of the green bond wave is already a large one across the world, and I think Latin America in general is coming there as well, and strongly. And I hope Central America could come even a bit stronger going forward. And then I think with COVID, the sort of the social bond wave, it's smaller, way smaller still than the green bond, but it's certainly coming. And congratulations, Dante, for the issuance. That's fantastic to hear.
Thank you. While I have you on, Janne, I think it might be interesting to sort of explore this a bit further. So I think there's one thing to be said about having products that are appealing and then having a supportive business environment, which you already touched on. But these are only parts of the investment equation. And I think the other thing that we have to think about is not just how we enter the markets, but how we exit. I know you think about treasury products, and so balance sheets and liquidity must be front of mind for you. In your opinion, how effective are the Central American capital markets for an international investor in terms of that liquidity on exit and the ability to hold the stability while you need it?
No, thank you, Tamara. That's a great question, and I really want to say thank you as well for inviting me to this panel. We from Treasury, IFC's Treasury Client Solution side, we focus on looking after local currency and derivatives and structural finance solutions in debt capital markets in fixed income. So sort of your question is very close to our hearts, and from IFC perspective as the private sector arm of the World Bank Group, we really pride ourselves of facilitating private sector's access to capital markets in both local and hard currency. And this way, of course, we can put our contribution to the development of capital markets more generally. So your question is sort of why would the developing of local currency or local capital markets matter? It's from our perspective, what we've seen in markets is that when you have a deep and efficient capital markets, it can really create access to long-term financing and really foundations for thriving private sector in the country. And this creates jobs and growth. And you see it in many Asian countries, for example. Let's take Malaysia. It's an excellent, brilliant example of sort of how the well-functioning, efficient capital market and growth of the access to capital market can help thrive the economy. So turning to sort of Central America from that angle, the depth and integration of the debt capital markets have certainly made a lot of progress in the region. But this said, I also believe that there's still much more potential left to channel both domestic as well international savings to productive investments through the capital markets in the region. And I wanted to sort of jump on giving a couple of examples on how multilateral IFC, but multilaterals in general can contribute to this. And there's at least typically sort of three different ways. We can work with governments and regulators to support the development of market infrastructure in a country or in a region. Sort of second way, multilaterals can issue their own bonds in local and regional markets. And this has many benefits. It paves the way for other issuers to come to the market. It crowds in new investors who may have not otherwise considered entering the market. And then it as well disseminates and harmonizes global market practices, making it easier for international investors to enter the market. And maybe to give 3 examples of this, we've issued Costa Rican colones in both onshore markets and offshore markets to crowd in international investors into colones assets with our AAA rating. We've also issued in Dominican Republic to channel local savings to priority sectors such as housing finance. And maybe finally, I'm very aware of terrific work that CAPE has done in issuing regional public securities in Central America. And by doing so, essentially walking the walk of promoting the integration of regional capital markets. And I think the point was made earlier that how important it is to see as a sort of the overall scale, if you will, that helps the attractiveness of the region and the functioning of capital markets as well. The third way that multilaterals can contribute to the deepening of capital markets is to help local corporates to access the debt capital markets, and at the same time sort of facilitate how new investors can come into attractive assets in these markets. And again, there's not one fit all solution for it. There's multiple ways we can do this. We can act as an anchor investor in specific corporate issuances, and that way put our balance sheet capacity and emerging market expertise into the table as a co-investor. We can credit enhance the issuance, uplifting the rating so that it can be distributed to wider set of investors. Or sometimes we can create private placement type opportunities to connect foreign investors with, for instance, ESG appetite in a given currency with a local financing need from our side by issuing an on lending at the same time in those private markets. And with all this, what we can really create is a strong demonstration effect in these markets, sort of almost pushing the realm of possibilities and in a practical way showcasing what can be done to advance the development of vibrant capital markets in the region and helping to create early opportunities in these markets for both issuers, public and private, investors as well for coming to these markets and entering them. So Tamara, thank you so much for the question, and back to you.
Yeah, and I'm sorry, you might not be able to get away quite yet, Yanni, because we had a question come in from Xuan Lam that sort of touches on this topic. But she looked at it. I know we've been talking about it in terms of the collaboration we've seen in the region, but the question that came in is actually a bit more specific around how individual countries can use the depth of their financial system to attract more investment. And I don't know whether you feel that's been well covered in your answer, because I think you have addressed most of it, but whether in that specific point, how competitive advantage can be gained, if you had any further comments to add, or indeed anyone else on the panel.
That's a great question indeed, and I don't know anyone else if you want to jump in as well. I think there's quite a bit of still of an opportunity to take a better advantage of the broader capital markets, and further integration. There's of course you look at countries like Panama that has a very well functioning capital market, and there's a nice integration going on in Central America for others to benefit that block. And I think it goes to the sort of Dante's earlier comment on how important is that sort of an overall integration from capital market and access perspective. I don't know, Tamara, if I answered exactly the question. I didn't have a time to read the entire bit there, so I appreciate colleagues on the panel jumping in as well.
Tamara, can I add something to the answer of Jan? We at CAVE, we are actually creating the Central American dev market. It's a regional marketplace, and we are actually in the middle of all the creation and the legal instruments that need to be created. It's still yet to be decided where the home is going to be, and probably Panama might be the home, or El Salvador. We're having them compete for for which country will be the actual center of this capital market, primarily for public debt service, for public debt. But then we will open it to private investors, and CAVE will actually, given that it's a regional bank, we will be playing the function of the liquidator of that market to ensure, as you said, that an investor can get in and get out whenever they wish, with the full backing of our balance sheet in there. As well, let me tell you that we have created, with the support of Korea, a $1 billion equity fund. So we were really trying to develop capital markets in the region, and trying to look for that scale, because individually it doesn't make sense. And also at the local level, we are actually trying to introduce the local currency bonds, more looking towards creating longer tenures in the market. So we are actually looking at Costa Rica, Honduras, and we chatted today with Guatemala to start issuing bonds in local currency to help address this issue of longer term debt, because the markets are actually still too shallow. So we need to introduce more different maturities at the market, assuring, as you mentioned, that an investor can get in and get out as they wish. So that's why CAVE plays a very key role in facilitating the creation of these new instruments that will facilitate investors to come in and get out.
Thank you. And actually, you have touched on a few points also raised in the questions. We had a question from Gary Kleiman about the investor concerns around, I'm going to call it governance. And what I've always observed when watching these products developed and how they attract capital, people are conscious of where they direct their capital, and often any suggestion of impropriety or political instability or inappropriateness will often drive capital away. And that's actually one of the things that I see as one of the most valuable functions of capital when it comes to driving ESG concerns. If any of the panelists want to comment further on that, please do jump in. The other question that came in, and Dante, I'm hoping you can field this a bit further. There was a specific question around diaspora bonds. So the question was, in spite of the relative stability in the region, there has been a huge influx of migrants leaving or sometimes potentially fleeing their home countries. Masamoto-san also touched on this earlier. What is your opinion on the potential for diaspora bonds?
Yes, actually, we are looking at that. You know, the World Bank actually had issued a longer, very long-term study of remittances. And as you mentioned, Central America receives a lot of remittances, mainly from the US, but also from Europe and some other countries. And so one key question that we wanted to address is the cost of moving money around for particularly low-income people. And you know, we are actually finishing a study on how we can actually generate diaspora bonds. And you know, the issue with diaspora bonds is that basically you want to issue in a country that is not a CABE country, because in this case might be the US. So the solutions that we have been looking at is how we facilitate this role of having a partner, for example, in the US, in which low-income people can start using the financial system to move the money instead of just going to a money transfer company. So, you know, we have seen how diaspora bonds have worked in the past, and you need a lot of collaboration between the country that you have the migrants working on and the country that receives the money. So it's quite challenging. And so we are interested and we are looking for solutions that try to first educate these very low income workers that are providing a huge relief for the region. I mean, the percentage of GDP is varies from as low as 5% as high as 15% of GDP. So these are not insignificant amounts of money that are being funneled to the region. So it's very important to educate the individuals who are sending the money, and we think that we need to educate them from the more basic functions of the financial system before we move to diaspora bonds. But that's something we are actually looking forward for the medium term as well.
Thank you. And yes, I think responsible investing is another one of the topics that we keep coming back to, and how we as institutions have to think about the investor base that we're dealing with and trying to help. And actually, Dante, you've touched on the topic that we keep hearing about these days as well, and it gives me a question that I think I'll pose to Marissa. So we've been hearing a lot about the role of multilaterals and sovereigns. And Masamoto-san himself spoke about the hurdles that sometimes are faced in regions such as infrastructure gaps to actually truly facilitate commerce. Dante, you've spoken about the investments in that space. So Marissa, I think one of the questions I would like to hear your perspective on is, what is the role as a private institution and and a resident in Spain, but also working with people who are resident in Central America? What role do you think multilaterals have to play in Central America?
Thank you, Tamara. Thank you for the question. I actually think this is a very timely question, because multilaterals have responded to the pandemic with different initiatives, providing governments with a quick response. I do believe that multilaterals and governments are key for Central America in three ways. One is mobilizing foreign investment into the region with the private sector. Second is working with governments to establish institutional and legal frameworks. And third is helping out in the development of local debt markets, as my colleague Jan was mentioning. So, I mean, we all know that trade policies and free trade agreements are very important. And we have seen a lot of progress in Central America, but you need the financing. So multilaterals such as CABE or IFC, as well as governments through their export credit agencies, are a perfect match for investors and commercial banks. So export credit agencies, on the one hand, are the government agencies promoting national exports. So they would be either financing or covering up to 100 of political and commercial risks. How this would work? Let's take an example of a project that is currently being supported by ECAs, like the Metro Line 3 in Panama, which has been awarded to a nation sponsor. We would have an ECA providing a guarantee to a commercial bank up to 100 of the total financing, as well as themselves, they are providing some part of the financing. So, I mean, their role is key. They are bringing foreign investment into the region. Why is this important for banks? Because the guarantees they provide enable banks to take, first of all, larger commitments, second, longer tenors. So this provides the bank with capital relief, which is important when funding Central American countries with weaker ratings. On the other hand, multilaterals are also a very important player. They were in fact the ones to develop the green bond market. So in Central America, they can bring credit enhancement mechanism to the table, such as the AB loans, so lenders benefit from their preferred credit status, or risk-sharing mechanisms whereby banks relieve capital. And I think most importantly, what multilaterals are very open and constructive to explore with investors and commercial banks the gaps within the private sector and try to bring in new solutions. The second role I think it is essential for multilaterals is to continue working with governments in Central America to establish the legal and institutional frameworks. And here I am referring to developing a robust PPP framework, also helping out to obtain sovereign guarantees for certain projects when required, or working with local regulators to recognize capital relief mechanisms. So this is key, so we have more bankable projects. And the last point that also John touched is how to help them developing debt local markets. They can provide the credit partial guarantees to new issuers, such as the Pro-America bond, or acting as an anchor investor. And also another point I want to add is what is key for local markets is that these markets eventually became euro-clearable, so they can attract international investors, increasing volumes and liquidity. So definitely multilaterals and governments will have a key role in mobilizing debt into the region. And I think it is critical they continue adapting and exploring new solutions for the financial markets.
Thank you, Marissa. And actually, I think, you've covered quite a lot in there. The bankable projects piece and how multilaterals have a role to play in helping build the governance structures to support bankability does touch a bit on the question that Gary had asked earlier as well. Another point you made that I'd like to pick up on and maybe direct a question to Janne on it is this idea of risk sharing. So Janne, I know that your focus is on the private sector, and one of the observations I've heard from the private sector is that the Central American region can be difficult to get engaged in because of what I think Dante referred to as the perception of instability. And that is the perception touches on everything from safety for people on the ground, political instability, economic instability, whether it's fair or not, there is perhaps a perception there. And so I think what I'd like to ask you, Janne, is what are some of the means for the private sector investors to think about engaging in these markets where they perceive a higher level of uncertainty? What can they do to navigate the decision making?
Thank you, Tamara. Great question. Again. It goes and it flows nicely of what Marissa was saying. Many of the sort of the tools that multilaterals can put into disposal of issuers or companies that need financing and investors are sort of a risk mitigant approaches one way or the other. Marissa mentioned AP loans that multilaterals have done long time and have a great track record of. Of course, you can do credit enhancement as well, like Marissa mentioned, really mitigate sort of either specific risks or some more broader risks, risk in terms of overall credit coverage. And there's many variations of it, and they have a nice role of sort of mitigating and enabling investors to come to a market where they may not completely feel comfortable with these instruments. What's nice as well with the sort of some of the credit enhancement instrument, at least from ISC's perspective, is we come into these structures from the viewpoint that sort of now some credit enhancement is needed, but we'd like to be in a situation where it's not needed at some point anymore. So we like the sort of structures where we provide the credit enhancement to the extent it is needed, with the view that at some point situation changes and it's no longer anymore needed, and that's a success for us. And private sector can come in and invest without credit enhancement. I'd like to maybe take one example that is a little bit different that we've done recently in Central America, and sort of illustrate the point of I think what Marisa said about our ability of being able to innovate and pioneer certain type of transactions in markets. It doesn't always mean that it's completely new structure, but it means that it's bringing a new structure to a country, or bringing an existing structure from another markets and applying it in a new country. And for instance, last December we financed in El Salvador a cooperative, Fede Credito, through a remittance-backed securitization. And I'm highlighting it because it tells the story of sort of mitigating the either risk or perceived risk that investor would have in the transaction or entering that market. It also plays into partly this conversation about diaspora bonds, and maybe this is the a little bit easier way. It's not exactly the same, but it's a little bit easier way to take advantage and finance the sort of economic benefit out of the remittance flows. So we financed Fede Credito through a remittance-backed program that allows them to get capital market financing on the basis of their remittance flows. And this transaction was to support Fede Credito's lending activity to women-led businesses in El Salvador. So very timely this month, given that we're celebrating women. And in fact, this was our first gender-focused remittance-backed securitization. We helped to set up this program already with Fede Credito 2010. And it was really a way to capture the benefits of their remittance flows for their strategic funding needs. And like I mentioned, at the same time, it allowed investors to benefit from the offshore flows as the sort of primary source of repayment of the debt, strengthening the investment proposal. And this is an example sort of, it's an interesting, of course, financial structure. It's not new. It's been done in Central America, in other countries with banks, banking sector in particular. It's been done elsewhere in the world. We've done this in Sri Lanka, a lot of it in Turkey, in other markets. But it's an example where we are very proud of working with different sort of solutions that allow us to crowd in investors in the region, and of course in emerging markets in more general.
Yeah, and of course, I think with these products, there's always the impact of it on the market. So in a way, the innovation is not necessarily in the creation of the product, but in the way it's changing the and benefiting a new set of people in a different way to what they've been used to experiencing. I feel like there's been so many questions, and my mind is pulled in 1,000 directions. But if I think back to the very start of this conversation, actually, Masamoto-san, you actually mentioned something that caught my attention, and it's been playing on my mind since we started speaking. You spoke about the statistics of Japanese firms investing worldwide. And when I initially heard the number of 150 firms, I thought, that doesn't sound terrible. And then I realized, on the scale of overseas investment by Japan, that is not that large a number. And so, it'd be interesting to hear your perspective on what you think distinguishes the regions, beyond Central America, to make them more attractive or less attractive to Japan.
Yes, thank you, Tamara. The biggest number of Japanese companies are operating in China, followed by the United States of America, India, and Thailand. As a region, Asia accounts for about 2/3 of Japanese companies operating outside Japan. That is the 50,000 out of 75,000. Let me briefly touch upon the history of the history behind our investment in Asia. In the 1980s, a severe appreciation of yen, the Japanese currency, took place after as a result of what is called the Plaza Accord in 1985. Export-driven manufacturers lost competitiveness in Japan and shifted to other parts of Asia. First to relatively advanced countries such as Singapore, then to other Asian countries, most notably to China. And first, these were parts of our export-oriented supply chains, but their production contributed to the growth and the bigger local market, producing a virtuous cycle of production and consumption. We have invested very heavily in China. There are like 30,000 companies active in China, and it is because of rapid economic growth, and it's an enormously huge market. But the past and the recent crisis, including the COVID-19, and have often reminded us of the importance of the diversification. And in Asia, I think Singapore is an extremely successful in attracting foreign investment, including those from Japan. OMFIF people never need a lecture from me about Singapore, but I think Singapore's merits include political and social stability, rich human resources, well-developed infrastructure, a strong financial center, highly liberal economy, transparency, and English as an official language. They have all good merits. They're like a black belt in martial arts. And Singapore is a very excellent case, and Asia is special for Japan because of geographic closeness. So let me touch upon a successful case in Latin America and the Caribbean. That is Mexico. Out of 2,900 Japanese companies active in the region, in this region, 1,300 are in Mexico. Japan concluded the economic partnership agreement, which includes an FTA with Mexico in 2005. Second, it's a second EPA for us, only after the one with Singapore. And Japan and Mexico are also members of the TPP-11. Since 2005, bilateral trade doubled, and the number of Japanese companies in Mexico skyrocketed from 400 to 1,300. Many of them are automobile-related manufacturers as part of North America supply chain. There exist challenges in doing Mexico too, including a difficult security situation. But the good thing is that we regularly talk about the business environment. We have dialogues and mechanisms established by the Economic Partnership Agreement. And when our foreign minister visited Mexico in January, I was a part of the team, but then he visited Mexico and met the foreign secretary, Mr. Ebrard, and the economic secretary, Ms. Cloutier. The most major topic was an economic environment. I refer to the examples of Asia and Mexico. I think there are some hints which can be applied to Central America. I think they include political, social, legal stability, security, transparency, infrastructure, and access to a sizable market. And dialogues with the business environment seems effective. I stop here.
Thank you. And actually, one of the things I also heard was this idea about supply chain proximity. So when, the idea of China was very much investable because of the supply chain flows to that market. And in a way, sometimes these economies do it for themselves by getting a competitive advantage in particular supply chains. We had a question come in about so I think it was the UNCTAC World Investment Report, where they reported in how Central America has seen an increase in FDI projects around COVID-19 because they had found a competitive advantage in medical devices and protective gear. And so in a way, I think you've answered that question, because what the question actually ended up saying was, do you think these advantages of Central America in these fields will attract more international investment? And I think what I've heard from you, and I just want to make sure that you've intended to say this, and this is what you agree with, the supply chain and the demands will lead, but also important will be the need for security, transparency, infrastructure, and access to the markets. So would that be fair to say your answer could be yes, but it needs more as well?
I think that is what I meant to say. And yes.
Thank you. I think perhaps we have time for one more question before we turn to closing remarks. And I'd like to close with Dante, actually. And so Dante, you had alluded to this earlier on when you spoke about the what sounded like a correlation between the performance of oil prices and the view of economic stability in Central America. Another sort of non-correlation that seems to exist is the idea of a correlation between local currencies, which you also spoke about financing in, and the dollar. And so do you have any views about exchange rate risks for investors in these markets and how they may want to think about those?
Yeah, well, the macro fundamentals on the monetary side are actually very sound. And one of the main reasons are actually remittances. I mean, the flows are just outstanding in terms of the size of the economies. And the countries, all countries are actually have accumulated reserves in a very significant manner, which is kind of odd because you're in the middle of a crisis and then you have governments accumulating reserves. Basically, it's because the stoppage of the economy, or the oil bill came down. So there's some correlation there. But so exchange rate risk is, I think has been, not such a real risk anymore because of the soundness of the macro framework of most of the countries. And if you look, I mean, even countries that were in turmoil, they are seeking to get an agreement with the IMF to let investors know, we are sustainable, which I find very interesting in this region. And Tamara, I want to answer one of the questions you mentioned before. And with the proximity of the US. I mean, the US is our big trading partner in Central America. And something we discover with the China-US debate is that nearshoring is a fantastic opportunity. I mean, the US is looking for partners that are close to their shores. Central America actually has trade agreements with the US that are fantastic. For example, there are safe ports, meaning that certain facilities in the region can actually sell to the US as if we were a domestic market to the US. So these kind of advantages are actually very useful. And one opportunity that was mentioned by UNCTAD in the question about medical products, we have had the request from one of our members to facilitate the creation of a park to create vaccines in the region, because Central America actually has a very good record of vaccination for other sicknesses. So the question was for them, why is it that this region depends from vaccines made in very far away from the region? So we're actually conducting a process of having some competition between all countries to create this biotech park in the region. So innovation is the key. And so when you see individual governments, they're really trying to attract foreign investment to come and do business, to provide for the $60 million people market, but also to the market that comes from with Central America, which is the US as the big market, but also the Caribbean, which is also depends from Central America in many ways. So which is still the unexplored market. So coming back to your question, the risk of exchange rate, dysfunction is actually very low. I think the highest risk in the region, as you mentioned, is to conquest these governance reforms and to generate credibility to investors that the rule of law is important and is actually facilitating investors to come and leave whenever they wish. But other than that, I think the region has been growing steadily, and we are here as CAVE to support those investors to come and feel confident that they will get a return from their investment and they can leave whenever they feel that it's time to go.
Thank you, Dante. I think that's an excellent note on which we should potentially close this segment of the conversation. I'd love to invite the panelists to share their closing remarks or what they have gleaned from this conversation. Perhaps if I start with Marissa, because I know that you are in the worst time zone for this in Spain right now. Marissa, to let you get away and into the safety of bed, what have you taken from this conversation today?
No, thank you, Tamara. No, I mean, I've said it. I believe that there are a lot of opportunities in the region. From BBVA, we've been supporting our clients in this region for a long time. I think that countries are making a lot of developments. They are wishing to innovate. I'm very glad to have seen a lot of new structures in some of the governments. So, I mean, there's a lot of room to grow, and I'm really thrilled to continue to do business in Central America, and of course with our partners, IFC and CABE in the region.
Thank you. And perhaps now to save Masamoto-san from missing his lunch, Masamoto-san, could I perhaps call on you for your closing remarks?
Sorry. Thank you, Tamara. I'm not a financial specialist, and I made the comments from the portion of the diplomat. But then in the session, remarks and question and answer comments and from the specialists are very stimulative for me. And I talked about this the opportunity and potential and how to make this potential realized. And I referred to the word and budget cycle a few times, and this like environment, economy, and production and consumption. And this is the key, like and to make this a good element together and make it roll. So in doing so, like budget cycle will be what is say ideal, and security and the other elements are necessary, but the budget cycle. And in this context, I would like to say one keyword which I think can appropriate in this occasion. There is a connectivity, which between the production and the market, also an segments of production will be the let's just say driving force, especially for Central American countries to overcome its smallness. Thank you.
Thank you, Masamoto. And I think we started with collaboration, and connectivity, of course, makes that happen. If I could turn to Yane for his closing thoughts.
No, thank you, Tamara. I'm going to keep it very short. I'm inspired by two things of the conversation in particular. One is sort of the combination of innovation, different solutions that are there. And I think the sort of the risk-taking and entrepreneurial spirit that is certainly in the region. And I think you put those two together and you should be in a pretty good place. You have things to fix around it, but you should be in a pretty good place. So that's one. Second is the, and this is thanks to OMFIF, is the sort of the connection that you are contributing to making between Central America and Asia. Asia with this conversation. I think there is many inspirational things there as well. We talked a little bit about sort of capital markets and integration on that and the importance of that. And there are great examples, ASEAN +3 in the Asia side, for instance, where there's an inspiration. And I think there's an opportunities from Asian investors to start looking closer to Central America. So those are the two things I'm very inspired by this conversation. So thank you.
Thank you, Yane. And I think to close the day, could I ask Dante, who's hands dirty in Central America, to share what he has gleaned from today?
Look, something I like about when I meet people from Asia is that I like to think that Central America needs to learn a whole lot from Asia, in the sense that the largest market for Asian economies is actually Asia. So to generate their own market, minimum mass to ensure that business are actually viable. So that's something in Central America, that's very true. The first partner of Central America is the US, but the second partner of Central America is Central America. So in that sense, we are very like, the Southeastern Asian countries. And this is what I like to hear when I have a discussion about Asia. And that's the one element. The second element, I think is very important, is that even during the crisis year, as it was 2020, this internal market was actually strong enough to ensure that the economies were not, go into depression. I mean, so we had very close collaboration with the IMF and on forecasting, and we were quite surprised on how resilient the economy was. And my thought is that the main driver of that economic growth in face of the economic crisis was the dynamic internal market of Central America. In that meeting I mentioned to you on March 11th with all the presidents of Central America, there was an agreement that which I like to mention because I felt it was very historic. They said, look, we are shutting down all the boundaries of Central America with the rest of the world, but we will not shut down the boundaries within our countries because we need the internal market to work during the crisis. And they actually kept the promise for more than a year now. And so I think that's very successful. And I find this similarity to the Asian market to be something very remarkable. So that's something I'm reminded of in this conversation that we had today. So Tamara, thank you very much, and all colleagues, thank you for sharing.
Thank you. And thank you everyone in our audience for staying with us through this. Our recording of this event will be available on demand. We will be sending out links in a feedback form after this event. Please do go and take a look at the OMFIF CABE joint report and let us know by feedback whatever you thought of this. Thank you all once again for joining us, and please do go enjoy the rest of your days or nights, as the case might be. Thank you all. Goodbye.